Welcome back, and as promised earlier, we're now going to cross over to the interview segment whereby we shall be discussing matters insurance in the country, and our guest this afternoon is Tolbert Luhatso Ndeda, who is a financial advisor at ICEA Lion Group. Welcome, sir.
Thank you so much, Jackie.
Okay, to kick us off, perhaps tell us, Kenya's insurance market has a low penetration, below 2.5%. What are the reasons for these numbers?
Generally, the reasons revolve around the perception. The way insurance was introduced to Kenya, it was on poor note in comparison to countries like South Africa, that the penetration is highly, the uptake is above 8%. Despite insurance being important, the Kenyan approach before regulation was set up was poor. I had the privilege to join the insurance industry when the uptake was very low in 2007. And the perception was insurance companies and the collapse of insurance companies with public funds and non-payment of claims were the main issue. So the public had a negative perception, but we have worked very hard to turn around the perception towards insurance, where the uptake is slightly going beyond 3 to 4%. So basically those, and then also there is a poor public knowledge about insurance. Most people, despite being a very important aspect of human and financial planning and risks, most people don't have sufficient knowledge to take up insurance plans. And that is now is my duty to educate the public about the importance of insurance. That is what we do as agents.
Very well. So how can the insurance industry package itself perhaps to increase the penetration in Kenya, as you've said?
What we have done right now, we are trying to do massive public awareness. We have a very good and robust regulation system, the IRA, and which regulates the practice, and underwriters have been sufficient and professional. Like if you go to ICEA Lion Center, it's a world-class touch of business, where we try to debunk this philosophy that insurance is a bit difficult when it comes to claims. With the latest technology, we are able to even process any insurance contract in a span of less than 2 hours. We are able to pay claims in less than a span of 3 days. So we are trying to change the perception, and we are able to honor our contractual maturities. So that's what we are trying to do, and we have seen also the growth of public institutions trying to educate the public about insurance, and also government. Remember, it's trying to does insurance. Are you aware? Government does insurance. Are you aware? Mm-hmm. Through NSSF and NHIF. Mm-hmm. But we are hoping with that a lot of effort from government and the private sector, the penetration will have to hit above 10% in the year 2030.
All right. Now we move on as insurance fraud has been flagged over the years in Kenya, with the penetrators using more uncanny ways. For instance, the IRA in 2020 stated that the insurance fraud was at 254.4 million shillings, up from 19.2 million shillings in 2019. So how can this be curbed in that industry?
We try so much. First, remember, our business is based on trust. So integrity is the key in practice, both between the middlemen who are represented here today. I'm a middleman of insurance. So we also try to curb it through training program, whereby we train and certify practitioners of insurance through standards tests done by the College of Insurance. We have moved digitally because you remember some years rogue insurance practitioners used to take clients' money and they don't submit. And that has been a setback to our practice in insurance, where rogue practitioners would take clients' money and then they don't remit. Like the mitigation we have taken up as a market leader in insurance business, we have gone to electronic data management, where if clients pay premium, you get a notification and you get a link. So with that, we're able to disconnect the rogue intermediary from hurting the client. And in terms of motor claims, we have a very serious investigation team, though quite minimal incidences, but we try so much to put a lot of investigations into the motor claims, which has been really hitting most of these insurance companies. In medical, most companies have gone biometric, where you get to the right policy holder and the setback in medical has been also regulating of hospitals, which has been a challenge. You remember during COVID, we had a lot of public outcry about claims because some of them the hospitals could not justify. But with a lot of if we regulate the hospitals, then in medical, and you have seen one of the underwriters going down, the claims could be lower. So that is the mitigation measures we are putting up to curb fraud insurance.
All right, very well. So you mentioned electronic data management among the technological adaptations being used in the insurance industry. Perhaps what other adaptations are going on in the sector, and how are consumers benefiting?
Efficiency.
Yes.
Electronic, I remember some years back, if someone got an accident, the imagination was now the beginning of the problems. But with digitization of the abstract and the claims process and the capturing of the data of the customer at inception of the policy, because we have gone to DVMC system, where you cannot, right now you are aware you cannot duplicate, you cannot have multiple covers from insurance company. That we have totally handled through the VMC system, where all insurance companies operate under one platform, and it's not possible to get a cover when you already have an existing cover. So with that, when a claims happen, it is specified even on the policy jacket. So a client gets value for his money, and they digitally will send you the cover. So you're able to go through and see if your cover needs meets your needs. And if a claim happens, we don't have obligation, but take the shortest time possible. Once we have the claim forms, you scan them, you allocate to a garage of your choice, we are able to handle that. Now, if you come to matters to do with pension schemes, education plans, endowment funds, these are most of investment vehicles Kenyans now have started using to bring financial liquidity. We electronically even send maturity to customer through using mobile phone. Through your mobile app, you are able to do some investments. I think you are aware of the money market funds, that you can do them at the comfort of your home or a comfort of your office, just using the mobile phone. Digitally, we have a Snapchat that you can subscribe to, and you can see, watch your money grow. So these are measures we are putting up to make insurance easily accessible to the public using electronic means.
As we discuss improving perception of the public as well as increasing the knowledge, perhaps why should an individual consider insurance, and perhaps what should they look for as they shop?
First, insurance is important because when God created mankind, we are not given sufficient we are not given sufficient modes of handling your finances, and we all live under risks. So insurance mitigates first in the unforeseen risks, and second, and risks that are obvious to occur. Let's say, like, if you have a child, it's definitely the child will go to school. Why wait to go through what Kenyans are going through? You are advisable to take education policy. Insurance comes to play. When you buy a car, it's a heavy investment. One of the most heavy investments by Kenyans is cars and houses. Why wait when a risk happens? And now you lose your car, or you go through challenges in trying to fix the car with dubious mechanics, because insurance will use world-class garages, and we try to indemnify, put you back to the normal status. If your car gets an accident, it means we have to replace that car as if it never had an accident before. Why would you wait to go through that when you can easily get a comprehensive cover that will take you through that analysis? We all work. At one point, our ability to earn income will come to short, either by age or by default. By default, I mean, you could lose your limb, you could get a fatal accident, you can no longer work. Insurance comes to play because you transfer the risk by paying a very small amount of money to have a life cover or a personal accident cover. When you are working, it will come by nature. We all grow old, and our ability to work, I think by 60 years, I'll no longer be at ICEA. But having worked for them, it's prudent enough to invest in guaranteed, or rather safe, form of investment. Actually, you should note insurance is one of the safest mode of investing by virtue of the high regulation, the transparency, and the measures that have taken up, government has tried to give, like when you take a life insurance, you get tax subsidies and all that. But at what point does it come to play? When you're old, you'll have your pension. Now, the pension is the traditional pension we hear about is the annuities. Annuities is insurance, where you get your income until the mighty God decides to rest with him. That is, I'm using a universal here. So that's how the importance of insurance comes to place in your human life.
So we see the savings culture of Kenyans has been known to be low, and perhaps how can Kenyans improve their savings culture to be able to afford insurance? As insurers, we try to educate the public on investing in form of insurance and through policies. Now, the unfortunate thing with our economy is it's a more of consuming culture, and majority of us have a poor saving culture. The way you are wired by God, you consume everything, and perhaps a little more. That's why you see Mshwari thriving and the Fuliza. It's because of the Kenyans financial knowledge is very low. But the basic principle is we try to educate the public to live below means. And also churches, don't forget, churches are also giving us a run for our money, where the 10% we talk about to invest are the same. Some churches have gone ahead to misinterpret. So insurance is so biblical and is so traditional that we try to educate the public to minimize on their spending habits and create some funds. Normally, we have emergency funds, contingent funds, and long-term funds, and also protect their families and protect themselves. You see, like when COVID hit, we never saw this, but people who had money market funds could easily afford their lifestyle. You saw families going through problems. Now, why wait for that when you can be doing some sort of a small investment of almost even 500 shillings in a day? Mm-hmm. I'm sure that is your lunch. Why can't you forego maybe within a week your lunch and just invest some small amount of money? Mm-hmm. You have seen in villages
I don't think government policy to provide for the elderly will work. It's a wait and see thing. But why risk when you can easily? Instead of going back to the villages, you go, you become a liability, or you start cursing your children. You can just do annuities, and when you retire, you live a comfortable lifestyle because you'll have the money, and you'll have continue drawing income the rest of your life.
All right. As we wrap up, perhaps, what is the future of the insurance industry in the country?
We expect first, because of the robust government support and the robust nature of insurance companies coming together through Association of Kenya Insurers and the regulator, the future of insurance uptake is bright. Because most Kenyans have started, the current generation has what we call sense of responsibility, and people want to live quality lifestyle. So with that, automatically, the uptake of insurance will be high. We have seen the growth of insurance dramatically. I've witnessed from 2007 right now is almost 3 times growth. So we see the future because of the current and the elite, Kenyans, most of Kenyans are elite, the uptake of insurance and the future of insurance is great in this country. But again, media, you should also sensitize people. Thank you for giving me this privilege also to talk to the public about insurance. So also be talking about insurance.
All right. Thank you so much, sir. That was Tolbert Luhatso Ndeda, who is a financial advisor at ICEA Lion Group. Thank you for gracing us with your presence and enlightening us